for great. Thank you. Okay, one more. So thanks everyone for those who joined. We do see more people coming. So we are really pleasure to have Nicole with us today. So Nicole is a partner of Lean Fund Innovation Fund. She was also previous Binance Lab executive director and previously worked at Deloitte as a consultant. Of course, have lots of experience in M&A. Is also a veteran with 2 billion transaction volumes. And she also got PhD actually from physics. So really interesting background. So today we will have her walk us through the financing guideline for Web3 startups. Then we can leave 10 minutes at the end for Q&A. So thanks, Nikhil, again for being our mentors. So floor is yours.
Thank you. Yeah, hi, everyone. So my name is Nicole. I try to deliver a very productive session without too much further ado. Okay. Yeah, so I'm going to talk about like a few key elements when it comes to Web3 financing. So there will be how to justify your token allocation design, whether you should sign a soft or a saved plus warrant, who are the proper VCs, investors in Web3, and how you need to deliver your financial projections for VC to be satisfied, and also how to justify your current valuation, and also how do you plan your fundraising schedule. Yeah, so I'm gonna be very concise about this page. So my name is Nicole. I used to work in Binance, but now I work for a new fund. It's called LIF. So we're the sister fund of Lean Fund Capital, which is a $500 million fintech fund. So I've been in the industry for about 3 years. So far, I've worked and invested with really like 150 plus projects. That's really because I was lucky enough to be working with the Binance Labs portfolio. So now LIF, we actually started first investment since June 2022. We already have 14 portfolio companies. Average ticket size about 500K. So we only focus on early stage investment. So our fund, sorry for the shameless plugging over here. So our fund has this ABC thesis, so we don't care about which sector you are. It's just about whether you are adding the true value to Web3, right? Like, so our ABC thesis, A for access. If you're working in the direction that you are going to convert a lot of users from Web2 to Web3, right? Like providing a proper access to blockchain. So that's a very ideal target. And B for better blockchain, we're constantly looking into infrastructure projects. I think actually half of our portfolio is infrastructure. So it could be data, it could be security, it could be Oracle, it could be blockchains, it could be scaling solutions, it could be anything. C for content, which is a part we are very bullish in as well. We are interested in metaverse, GameFi. We invest in SocialFi projects as well. Yeah, and this is a list of our portfolio. So certain already committed, and one is in the final stage of deal closing. In terms of, so the first topic is the token allocation. So I put a example over here. So I think this is some habit most of you guys should check before you decide your governance token allocation. But I want to really focus on one thing is that just because someone designed your governance token structure, maybe even including some token unlock schedule, doesn't mean this is proper tokenomics design. The real important part for tokenomic design is actually how you're going to use your token within your protocol, right? The utility case is more important. And a lot of projects, like for example, gaming related projects, SocialFi related projects, they have like 3 different elements. There should be NFT, there should be utility token, which is the in-game reward token. There's also the governance token. These 3 tokens, they need to be functions of each other, right? So governance token itself is not the most significant or the most important part. that real token design, right? You actually need specialists. So back then, even until today, when we work with our portfolio companies, right? We really, let's say if you're really a game projects, we need you to run Monte Carlo simulations and you need to plug in, beta test data, like beta test 1, 2, 3, with real user metrics, and to maintain an inflation rate. Like examples like, we all know, right? Like X Infinity, for example, when the SRP token price cannot really sustain, right? What was the real reason, right? It's not just that people don't believe in the project anymore, right? It's overinflated. So how to maintain that is very important. And then a good practice is always that before you decide your governance token structure, you need to design a proper tokenomics system for your utility token, for your NFT, right? And also for how your governance token is controlled by both of them. So that's a separate topic for tokenomics design. This is a very deep thing. Like I would say you really need someone who has experience to do that. So what I explain over here for token allocation design is really for governance token, because usually governance token is the investment target. So this is what I see a lot. And then I want to show what is a normal standard in the eye of investors like us. So I use Hook as an example. So Binance Launchpad usually is sort of an industry trendsetter because everybody wants to get listed on Binance, and they have their requirement, which is totally understandable, which is also a reason I use Hook. So myself, right, because I used to work in Binance Labs, I also help projects to go for Launchpad. My project, for example, include Toko Crypto. So that's the TKO token. So usually you have a few pools. If your product is more complicated, you probably have more pools. So what's really important over here is your team allocation and your private sale allocation. Private sale usually means the investor pool. So I just want to say we rarely see private sale pool to be too high up. It's usually around 20%. The reason being Web3, right? The reason is Web3. It has to be decentralized. If it's like Web2 VCs, or like let's say SoftBank usually can invest 30%, 40% of a company, right? Then it's not decentralized anymore. It doesn't satisfy the Web3 spirit. So Web3, one basic requirement would be you need to make sure majority of your token are held by the majority, right? And then the minority pool, right? Who are the minority pool should be your investors. It's just a handful of them, right? It could be up to 10, 20, but it's still the minority as compared to your users. And then your team allocation, right? And then, so these are the pools which are controlled by minorities. So make sure this pool altogether should be the minor half of your total token allocation. So take Hook as an example. If you see Binance Launchpad sale, right? Usually this is open up to about 400,000 token holders who participate in the Binance Launchpad. That's a average number. So this is, of course, gave it to the public. This is the majority audience, right? Ecosystem and treasury. So this is also for the protocol itself. And ecosystem developments, like they use this part of the pool to reward users, right? And for community, of course, is for the general audience. So 55% plus 5%, this is 60%. I would say this is quite a standard like allocation, right? Make sure your token allocation has this criteria satisfied. Otherwise, investors also feel a little bit uneasy, right? Like let's say if your private sale pool is very high allocation, then you're facing a very strong dumping pressure when it comes to token unlock. It's also not a very safe thing. So you need to keep that, I would say, number indicator in your mind. Be cautious. And also, right, like leave some buffer for adjustment as well. Don't be too greedy. So that's just some honest advice. And then for go back. for the token unlock token release schedule, right? Usually investors and the team pool have some level of cliff. So 6 months to 1 year should be a common standard. I think Hook over here is about 6 months. Actually, this is 1.5 year kind of pool, kind of cliff, but that's actually okay. Usually, if you need to give investors some hope that they are able to exit in a timely manner. Like for example, if it's crypto VC, the fund lifetime is about 6 years. You need to make sure it's like 3 to 4 years, everything is fully unlocked so they can exit properly. Otherwise, you'll scare off a lot of investors. And then for team, right, you need to prove to your investors that you're fully incentivized. So team pool, I would say 5 to 6 years fully unlocked is quite a like industry standard. And also for just a small kind of tip, I would say for your initial circulation, what does it mean? Meaning the day one you list your token in a centralized exchange or in decentralized exchange, it doesn't quite matter. So pick your true counterparty. What does it mean? Basically, you are definitely on the good side for a project, right? You are not really the true dumper of the token or seller of the token, but your counterparty could be people who have access of the token before the listing, right? It could be the airdrop people. That's why people projects spend a lot of efforts to find a right audience to do airdrop. It could also be early, let's say, advisor, right? Some KOLs ask for unlocked token from day one to share your product, right? So I would say you need to find a right counterparty, make sure they are not the opportunistic sort of audience, right? Like reward the community who truly believe in your project, right? Like when you do airdrop, don't just blindly airdrop to the users who don't understand your project. Let's say I've seen so many Web3 projects, they would just blindly cross some data. Oh, so this address 1234, they have X amount of some kind of token who are relevant to our project. So I think they are my ideal user. But the thing is, if you just randomly airdrop your token to them, they wouldn't know your product. How are they become loyal to your product, right? If you airdrop them without properly engage them, of course, they will just sell a token from day one, right? So design your airdrop mechanism. Make sure all the token holders at the initial stage are actually interested in your project, right? Even if they sell, they probably feel like, oh, I sell, but the price went up and I feel so FOMO. I want to come and buy again, right? So these are the important I would say homework, like before you plan for your token listing. So yeah, in sum, right, make sure your investor pool is at a reasonable amount, right? Remember back then, like Aptos released the token model, everybody was criticizing. One of the reasons being the investor pool was actually quite big, and then they paraphrase it into, oh, we gave majority of the token to community, but everybody knows exactly how it works, right? It's not a very good example. So you can refer Binance Launchpad as one of the key metrics, right? Usually Launchpad allocation is quite big, but for IDO, like initial DX offering, is like around 1 to 2% because you simply don't have that kind of audience as compared to centralized exchange. So these can be adjustable, I would say, but then private sale pool, team pool should have a very clear benchmark with the Binance Launchpad projects. Yeah. So I think most of you already went through this if you are already selected as a Web3 project. So usually we have two formats, either it's soft or it's like saved plus a token warrant. There are some special requirements once in a while. I've seen all of these actually. So back then with Binance, I don't mean for Web2 or like traditional finance kind of investment. Even for crypto, we do MFN, we do options, we do like this kind of price adjustment mechanism. Yeah, so how does it work? Who have the right to request it from me, right? We can just give you some like brief idea. So before talking about like soft and safe, right? Like all the contracts require you to put a like a wallet to receive your investment fund. So this is very important. So in Binance, we would do a lot of like double check whether you are using a proper token custody service or you are having a decentralized, right? Like the reason being, we can usually proper VCs and people who are from a proper institution, they wouldn't randomly send address to just to the project itself. We need to make sure that you're not going to abuse the money and someone else also have the right to control the account, which is normal. Like in Web2, right? Like you need to set up a bank account for an entity where your finance team have access of it, not just the project founder. Right? So it's just a very common requirement. So there are many ways. There are centralized. There is centralized compliant custody service. Like for example, there's finance custody. If you're investing in Binance, probably they will advise you to use finance custody. There's also Coinbase custody. There's like Anchorage. There's tons of these like compliant custody service. I think they're great, but they could be quite expensive. If there are promotion kind of year, right? If they're new to the market, then you can benefit from that. This is up to your own decision. There's also decentralized ones. Fairblocks, I would say, is semi-decentralized. The product itself, right, is MPC. It's quite decentralized, but they use a lot of centralized elements to make it SOC 2. SOC 2 is like a requirement. I was not. It would be a standard, right? Like a requested by companies with insurance license. So meaning your entire risk management profile satisfy a certain level. So this kind of decentralized product, but satisfy the SOC 2 level. There are a lot of them out there. I would say they're great products. Our fund, for example, use Fairblocks, but to be honest, they're quite expensive. If there are alternatives, of course, you can pick them as a startup, right? Like a cost is very sensitive. Yeah. And No-Safe is a good product as well. Like we want to make sure, right? Like your team and also sometimes like key investors can have a control of your treasury. So also want to remind you guys, right? Like because I've seen a lot of projects who suffer from this given the FTX event. Some investors might ask you to put money in a specific location. I think it's unfair to ask. You should know to reject those. Like for example, FTX asks a lot of those small startups who are less influential in the industry. They will request them to put their funds into FTX, and now as a result, most of them lose their treasury. So I think it's quite unfair, and you should know how to fight back with that. It's not reasonable, and I wouldn't say it's legal in a way as well. Yeah. And in terms of fiat, some projects does accept a fiat as investment fund, as like the investment currency. The fiat is problematic because we have the expectation that we can avoid certain kind of tax. I don't want to say it too obviously, but you understand what I mean. We want to make sure we have the best tax structure. So usually for the SAT, right, like you need to sign it with the entity who either directly own the token or has the right control of the token, right? Usually the token issuance is actually the foundation, and this foundation could be BVI, etc. So it used to be Singapore. Singapore is one of the popular like foundation entity place, but then later Singapore actually start to have capital gain tax for crypto. So even though they don't have capital gain tax for stock, for equity, but they actually have capital gain tax for crypto. So you need to be very cautious with that. Don't just Google like Deloitte research and about tax, and then you thought, oh, no capital gain tax, but it doesn't apply for crypto, even for Hong Kong. So Hong Kong is about 15% capital gain tax for crypto, and Singapore is about 17%. So be very cautious about that. Find out where your entity is, right? Like whether this entity has the best tax structure, right? If this is a relevant topic. I cannot give advice for that. All I'm saying is, of course, I'm not a tax expert. All I'm saying is when it comes to fiat transfer, we usually transfer to an entity which has a special service agreement with the opco or with the foundation. So this is just something as a gentle reminder, right? Like, of course, it satisfies our fund's legal compliance standard. Yeah, when it comes to you, is it the most tax benefit structure you can consider? The second one is in terms of jurisdiction, the entity location and which law it practice. It's actually two separate matter. You can be a Singapore entity, but you can practice US law. It's totally possible. So be cautious of that. So we see a lot of like a Delaware entity, which is US law typical, right? And then there's a Cayman, there's BVI, there's sometimes Singapore opco. It's all possible. So consult a lawyer before you decide this, because different VCs might have different standards as well. So something for you to keep in mind. And also, again, like you need to be cautious about the transfer pricing. Again, it's related to tax. Right? Like even though your foundation entity could be BVI, but you might be exposed to capital gain tax, and how to avoid that, right? Like consult some lawyer. They are very, I would say, proficient in this. There are a lot of crypto related lawyers. Yeah. And then, so that's for the jurisdiction. And then some special requirements. So SAFT and SAFE, what does it mean? SAFT means simple agreement for future token. So it's very simple. In this template, it defines like an investor and then the company, right? Investor gave the company money, the company gave the investor token, and this token can be unlocked in a certain time period. Described very clearly. But then not every fund can accept token. So some, especially US fund, they prefer equity because their setup is for investing in equity companies. So usually what they do is like, yes, there's a safe, you can invest at certain kind of valuation, and then you have excess amount of shares at this price. And then you have a set ladder, which is the token warrant. Warrant meaning with this shares, you're eligible for how much token. So usually, right, like with this safe plus warrant format, 100% of the equity represents the team allocation of the token. So you need to be very cautious. Not every project, I think some project might have the one-to-one correspondence, but not every project have this kind of structure. So you need to be very cautious. Explain it to an investor, and for investors as well, like we are very cautious on how much exactly token we can get in the end. And also we would request some special clause within the warrant. We tell them, oh, our a token allocation cannot be below XX 6% because we have a fair value in our mind on how much token we are eligible for. So these are all common scenarios you guys can might experience in future. And also, what is MFN? This is called most favored nation. So meaning sometimes, right, if I invest in an early stage project, it's very risky. So it's as a risk management sort of a strategy, I would ask for this MFN clause. So meaning the future investors cannot have better like arrangement than me. So this is very common, and I think it's fair for early stage investors, right? They are your biggest believer. They bet on you the earliest time, even though they might not be the most influential, but they deserve some fair treatment. So MFN is very like a frequently seen, yeah. And then option is also popular. So what does it mean? Like as an investor, I really like your project, but I probably don't want to put so much capital in you immediately. I want to give you some money, but as your project develop, I want to see if you are showing some upside later, right? Then what I do usually is like, I want to request a small option, like a contract. How does it work is that, let's say your valuation now is 20 million. Just a random example. If your valuation random like is 20 million, I probably put $500,000 in your fund in your project now, but then I still want to bet in you. What if you become really unicorn in future? So I want to sign an option. So meaning that say within 1 year, it could be any time range, right? Within 1 year, I want to have the right to purchase your token or equity at, let's say, 25 million valuation. Yeah, and then this option expires at you know, like within 1 year time. So in this way, right, like this only means that the investors still want to bet in you further. So it's actually a good thing. And we've seen this a lot. It's nothing hurtful, I would say, unless the project itself, the startup has other arrangements and you don't want to offer this. And also option is a right, kind of it's a favor for the investor side. So you need to consider it's also part of the MFN in a way, yeah. And then there is the price adjustment mechanism, which is also quite common, especially if you're an ecosystem investor. It happens before, like during my previous job. So we would sign this price adjustment mechanism. For example, if you're a centralized exchange, you say you're really good. Okay, I can believe you, but I want to prove, like protect myself with a contract. So what we do is that we would agree on 4 milestones, and each milestone after reaching it, I will give you 1 payment tranche. But if you don't meet this milestone by the time we agreed on, I need a discount for this tranche. Or some extreme case, I just don't give you this tranche, but the equity or token still gave to the investor. So this is the price adjustment mechanism. In Chinese, it's the typical 对赌协议. In crypto, especially for early stage product, I would say it's common. But then in a way, right, like you need to balance yourself. Is it really worth it to do this with the investor? Is the investor really good enough for you, right? Does it really provide you enough, let's say, a support ecosystem, BD, or like refer you to the right partners, whatever? You need to balance yourself, yeah. So that's for the safe or SEPT or SIP plus warrant section. And then for Web3 investors, there are still many kinds of like investors out there. I think last year we heard a lot of like big names, right? From Citadel, Goldman Sachs to, like say, Temasek, Sequoia, Tiger Global, right? Everybody is investing in Web3. So how are they like? Or what is their investment style? What are their requirements, right? We can briefly discuss that. So there are mega funds like, for example, Temasek, right? Like they're huge. Tiger Global, they're very huge. So usually they have like investment tickets kind of requirement. It makes sense for Temasek because it's simply not worthwhile for the team to do that kind of work because they have too much capital to deploy. They would never invest you for, let's say, 500K. It doesn't make sense for them. So Temasek's minimum ticket is actually 25 million, and some other mega funds have like a very similar standard in tens of millions. So literally there are just a few handful projects they can actually invest. So not surprised that we invest in companies like FTX because they're expensive enough, and then they have certain cash flow that meets the requirement of companies like Temasek. So yeah, so that's for the mega funds. So I don't think they are really making any sense for early startups. So usually they only invest in, I would say, unicorn status kind of company. But then top VCs, they can be more flexible, I would say. That include Tiger Global. So Tiger is really, they're very, in terms of millions and then tens of millions, they're very flexible. Sequoia has like China, Asia, India, US, there's many different geolocation, and Kuwait, right? Kuwait invest in Certic in due analytics. They're betting a lot of infrastructure play. And Breyer is Jim Breyer's Breyer Capital. They are actually the people who referred Aptos to Binance. Because they're related to Facebook and that kind of ecosystem network. Yeah, and Lightspeed, etc. So if you're that kind of gene, right, you're able to pitch this kind of a TradFi Web2 people. I would go for it. But then you should also know they have, even though they're flexible with ticket size, but they're not like a $500,000 kind of ticket size, I would say. Minimum, I would say 1 to 2 million. Yeah. Still consider your valuation, consider your rounds, and then before you reach out to them. And then there's also crypto VCs. I would say after FTX, a lot of Western VCs are really struggling. Like from my knowledge, right? Those VC who I used to interact a lot. Some are quite quiet currently. So I don't want to do any name dropping, but a lot of the big news came out recently, Multicoin, Pantera, etc. So do some due diligence before you reach out. Don't waste your time. Yeah. And then there's also institutions and ecosystem. Institutions, it could be centralized exchange. It could be banks. It could also be a company like a Tencent, right? Like for example, one of our portfolio company has about like 10 million investment from Tencent. They are like doing trading. So all these institutions will find a way to enable their ecosystem to go into Web3. So if you can have certain angle like that, like for example, Tencent also invests in Immutable X, right? Immutable X is like a layer 2, like secure rollups for games. It makes a lot of sense, right? Because they are one of the largest game company in the world as well. So there is like synergy. So I would say like when it comes to ecosystem and institutions, right, you really need to pitch yourself in their angle. What are they looking for? How you can enable them to future-proof, etc., or how you are able to support their ecosystem projects, right? You can talk to their BDs once in a while and find out what they are looking for recently before you reach out to them. But yeah, a lot of them are actively investing. Like for example, our fund, we talk to Baidu, Tencent quite often. They are looking for infrastructure kind of projects, and then we have a strong appetite for that as well. And also like for centralized exchange for ecosystem, right? Of course, they want to get projects onto their blockchain or into their portfolio, potentially got listed in their centralized exchange. So it's all there. And then you guys can do some networking to outreach if you find yourself to be an eligible target for these institutions and ecosystems. Yeah, and then I also saw a lot of KOLs, DAOs in media. Like for example, Talkin is Polychain's partner. Like Talkin and Niraj, they are the co-founders for Polychain previously. But Talkin left Polychain later, so he did a DAO 5. That's a quite centralized DAO, I would say, but then it's a trend. So there are a lot of investment DAOs and saying, oh, we have a huge community. Our DAO contributors have what kind of influence in the social media, whatever, like spread all over the place. Yeah. So my advice is that I don't see the DAOs really have that much impact so far, because decentralized way, right, also make it hard for portfolio management. Like for example, our VC, if you get invested by us and you say you need some help from us, very straightforward, you telegram me and then I'll respond immediately, right? So centralized way has its perks. And then some of those KOLs, right, like I know there are a lot of KOL groups and they say for social fi projects, if you want to get some marketing kind of support, right, you can give allocation to this KOL union. Let's say Stepan, for example, Morningstar Ventures, not the Web2 Morningstar, the Morningstar Ventures, I think it's Australian guys. Morningstar Ventures told me that they and their KOL group have an allocation from Stepan, and then their KOL was the instrumental part for Stepan to be so widely spread. I'm like, oh, sure, but so you need to. It's useful, but how useful is it, right? You need to be the critical one for that. You need to understand their KOLs the right profile for you, right? Like and just to be honest, right, like for Binance Launchpad, there's also KOL but then, right, Binance KOL is actually very good quality. They really cherry pick and they make sure it's not so obvious. You know what I mean? So be very, very cautious. Some of the KOL might not have the right audience for you, and then in the end it could give you a opposite kind of effect. So be cautious about that. But then again, this kind of media KOL kind of investor, they're out there. I know Foresight is very bullish recently. They made bet a lot of social related projects and leverage on their media platform. I think they're probably very helpful. So you as the startup founders, you be the judge whether their KOLs are your kind of target audience. Yeah. And then the final part is really geolocation specific, is the gene for a lot of the big VCs, especially the famous ones. Like for example, Sequoia has China, India, Asia, US, right? They have like a very strict, I would say, rules and understandings. Like for example, China invests in the Chinese ones, obviously US invest the Europe and US ones. Like Sequoia Asia usually invest in your entity setup in APAC region. And then India, of course, looking for India founders. And Lightspeed also, like so I'm quite close to Lightspeed Asia guys. Obviously, because I'm based in Singapore and then we're in the same circle. So Lightspeed Asia doesn't invest in projects have entities set up in the US. So before you pitch to them, you find out if you're pitching to the right guy. Otherwise, it's a waste of time. And then it doesn't make sense to offend them. They probably did a lot of due diligence on you. They realize, oh, your location is wrong, and then it's really not so sweet. Yeah. So that's about like Web3 investors. There are a lot of details, and I would say there's a lot of gossips as well. If you have a solid investor in your cap table currently, I think they probably can give you some insights as well. Investor circle is really small. Most people know each other. So yeah, like do some due diligence before you outreach. Yeah. And then in terms of financials, right, like I use FTX as a picture. Really, this is a demonstration on how important corporate governance is. Doesn't mean that you're free, you're like a geeky vibe, and then this represent Web3 spirits. No, it doesn't. Corporate governance is very important, meaning you need to manage your financials clearly. You find the right operation guy who are able to deliver this corporate governance. This is so important. Back then, in my previous job in finance, we started, so when I joined, there are about like 40 portfolio companies. That was around the time, I would say it's the bottom of the bottom. But then it's really dust till down. By then, Bitcoin, I remember, was like a 3,000, 4,000 US dollar, but it went all the way up to 60,000. Yeah. So a lot of the projects, right, they really don't meet the basic standard of auditing even. And then I realized it's very common in Web3. That's why now, as an investor, right, like after going through this exercise with really hundreds of portfolio companies, every single one, you probably need to tell them, oh, how you manage your cash flow, what is your result this month, next month, etc. So after doing this with each of this startup, usually it's because the team is extremely young. You realize proper corporate governance, plan your financial properly, really can get your company survive longer. This is so important, but it's such a basic practice, right? I would say like it's important to respect this kind of old experience, right? This is just literally hundreds of years of experience to manage your company. So yeah, like now as an investor, when I look at a project, you tell me this is your burn rate, this is your runway. I want to see if the founder is actually planning it with the proper thoughts, right? How do you see your company to grow? Whether your core members have the dedication and incentives to stay with the company, right? The numeration could be small, but then in a way, it cannot be too small. You tell me you take, let's say, $200 per month, unless you are very rich already from previous job. Otherwise, I feel like this is not sustainable. And if you're not sustainable, you're not happy, then your team chemistry, team dynamics is bad. Then I worry, you guys probably fight with each other, and then the startup is over. Then I don't feel comfortable at all, right? So it's probably case by case, but we would analyze, right, like the enumeration for your core team, enumeration of your developers, enumeration for your, let's say, community moderator even. Is it really sustainable, right? Case by case, it could be different. And also we want to make sure there's always long-term incentive structure. Like what does it mean? Usually with a team allocation, you have a pool for employee future token option. For example, the strike price could be zero. Like for example, you are such a dedicated worker, right? You already just random number. Let's say you are eligible for 1% of the team token allocation, but I still want to reward you. Let's say if you deliver milestone 1, 2, 3, 4, every milestone I take from the employee token option pool, right? I take it out, and then I give it to you as extra incentive, right? And this pool probably get fully unlocked within 6-7 years, a random number, right? But then as an investor, I would know you are incentivizing your core members or your important members to stay there for the long term. And also you need to have an allocation to really give promotes to your, could be your junior member who are not in the core team, but they demonstrate strong skills to add value to your company, right? All these mechanisms should really stay within your financial planning. So I think this is very important. And also, of course, during the bear market, always make a safe buffer before the fundraising. You never know how long the bear market could be, right? You say, oh, I think bear market is within 2 years. So I only plan for financial within 2 years. After 2 years, I sharply run out of cash. I will be very worried. What if you cannot find money immediately after 2 years, right? So leave some buffer, leave some like room to adjust accordingly, right? What if you really run out of funds? What is your mechanism to save you? How do you manage your treasury, right? Like there are so many ways to really future-proof your company financially. So think for that. Plan your financial. It's not just one page of deck. It shows a lot of your skills for corporate governance. Yeah. And then in terms of how to justify your valuation, of course, there are just a few methods, right? Like in Web3, the PE ratio is very common. That say like yeah, I worry I am probably like name dropping is not right. Okay, so there is one company, I don't say the name, but the valuation is damn ridiculous. It's 10 billion valuation. And then when we do the due diligence on that project, their annual earning is about 100 million. So in that case, right, the price earning ratio is simply at too ridiculous of a level, right? Even SaaS valuation cannot justify that. So that's the reason we passed back then. And also when investors do due diligence, right, you say your revenue is recurring to justify this PE ratio formula. We would check the breakdown of your revenue. In that case, that 100 million revenue company, right? We check the breakdown, and we interviewed their high frequency user, and we realized this revenue, this like a financial record is probably a little bit too buffed, so we don't really believe in it. But all I'm saying is P ratio is still common, but I would say it's mostly adopted by mega funds and large VCs, and then it applies to companies with recurring income, and then I would say 100x is like the maximum. I haven't seen anything bigger than that. But I would say be realistic. Now it's bear market. Don't ask for too much, right? And then you scare away a lot of people. It leaves some bad reputation for you. Yeah. And then how we evaluate early stage project. So I have my own formula. My formula is actually what is the requirement for capital. So let's say you want to do this, you want to reach this, you want to build this product. How much money do you really need? I will analyze in a way that where do you have your engineers based, right? Like a Chinese engineer, let's say if in Chengdu, it's probably 10,000 RMB per month. They're very good price, right? But it's in the US, right? Like 5 years develop, probably your expense about 200K US dollar. So that's why US companies usually have a premium. So that's the geolocation premium I was I mentioned over here. Yeah, so I would have my own formula to calculate what is your right capital requirement. Of course, you will also show me your burn rate and then your runway, right? Like when do you plan for your next fundraising, or when do you plan to make revenue? So there is a proper kind of estimation on how much capital you really need to build that product. And then you tell me how much allocation you want to sacrifice for this round. Let's say for seed round, you want to sacrifice for 5%, then very straightforward. You need 200,000 and 5%, and then you divide that, then you have your valuation. Of course, the number can go up and down, right? You do some benchmarking, final adjustment, but this is just a general guideline for early stage investment. This is how I would evaluate a company. Yeah. And then benchmark, right? Like we have very specific stage. Especially for Web3, you have an idea, but you probably don't even have the white paper out, right? That's a pre-algorithm stage. That really depends on how much you're able to articulate, explain yourself to the investor and build trust with the investor, right? So pre-algorithm is really the angels of angel kind of investment round. And there's also pre-product. You have the white paper, you have some development work done, but the product is not live yet, not even beta. Yeah, and also there's like pre-launch. Pre-launch meaning you probably at beta testing, testnet, whatever. It depends on what kind of project you are. So each stage we usually have clear benchmark because there are just so many projects out there. Yeah, so we we probably just, do some benchmark adjustment based on this common formula, and then offer you a term sheet. Yeah, and then of course there is geolocation premium. US companies tend to be more expensive. I already accept the hard truths. Like example, like I think most of the projects like Polychain, Pantera referred us as simply too expensive to bet on. For us, right, Web3 is really I would say global. Just because this is US developer wrote the program doesn't mean it's really more effective than other geolocation, right? It's about the finality of the product itself. But then again, we see a lot of true innovations for this kind of premium locations. So it's a trade-off for us as well. We would consider seriously and find the most cost-effective targets to invest in. So yeah, like put words like what is your real total addressable market, right? And then budget a proper runway and show your determination to your investors, right? Maybe they can give you some premium to your valuation. Yeah. And then the last part is actually fundraising timeline. This is just a general indicator. I would want to see at least a 3 years roadmap for early stage project. And I would say if you're late stage, probably even more long term. But for early stage, because we need it to be more detailed, because I want to make sure you use the investment fund properly, right? Like deliver each milestone properly. I would say the time dividend should be 3 to 6 months, right? Like let's say the first half year, you are doing item 1, 2, 3, 4. You need to show it very clearly to the investor, and then put the fundraising timeline inside your roadmap, because at each stage, let's say your angel pre-seed round, your seed round, your A round, right? Investors have different expectation with you. Doesn't mean that just because your company is founded 2 years ago, now you can raise an A round. It doesn't mean that. And to have that kind of later round means you need to justify improvements as compared to previous round to justify that valuation. So that's why we can go through this briefly, right? Usually companies set up and you need to put up your initial team. You probably have some investors who are very close with, they trust you blindly, right? So for example, there's one project called NXYZ. I'm a big fan of the deck back then. But before I could even ask, their valuations are already so high. The reason being the core founders, they have a lot of friends and family within the Google circle. Everyone is so wealthy. They just do one friends and family round, they got 10 million. I'm like, okay, you're too expensive for me to invest. So it doesn't make sense. This is just an example. All I'm saying is angel round, right? Get money from, let's say, your mentor, people you trust in, right? Like, or join some incubation program, and they give you clear guidance. That would make sense. And then they give the best value at the initial stage, of course. They take the most risk, so they have the best pricing. And then if you want to raise seed round, that means I need to see some POC or MVP. I cannot just invest in you with a deck. So at least, not in bear market, maybe in bull market, people, let's say if you're a Stanford graduate, you put up a deck, you 200 million valuation. I saw Polychain did that, but like, it's not something I can really reconcile with myself. So yeah, like seed stage, now the common trend is that you need to have a POC, proof of concept, or most minimum viable product. Yeah, so at least the investor need to know what you're building, and then they can have some imagination on how this product will evolve to be. And then afterwards, right, for Web3, essentially you really need to build your community, right? Remember, as I mentioned, investor allocation is usually about 20% when it comes to token project. So majority of your token really belong to the community. So the community is so important. You need to make sure they grow with you, right? Especially a lot of cases, right? For example, if you're a game, your game is at early stage, you better know your early stage community, right? What are their tastes? I always tell my portfolio companies that at this stage, all your customers, all your community, they're your evangelists. They believe in you at such an early stage. So engage with them, work with them, know their true preference, right? And then evolve your product. They give you the most education, I would say, for your product development. So at this stage, really engage with the community. Don't go for a shortcut. I know a lot of them just go for those traffic, right? Like, not that I'm saying those are horrible projects, but I'm saying don't engage this kind of shitloads of traffic when your product is not ready, because the outcome is so disastrous. Right? Like, I would say at the beginning, go for the organic growth part, engage your community, understand what they really want, right? Then you reach a certain standard and then go for the mass audience. It would be more worse, I would say more sustainable in the long run. I've seen a lot of communities, right? Before it was still a close-knit kind of very friendly community, right? Like people talk about, oh, this feature is not good enough. You could have done something else and it could be so much better, right? They give critiques, they give ideas, but the moment they go for those XX projects, and then it comes like thousands of bots come in, right? And then the Discord channel becomes like a GM, and then one true fan probably just say some critiques, and then he's bombarded with hundreds of like GM. In the end, all those early startups, right, they have to give up the original Discord channel and go for a new channel, because simply your community cannot talk inside this kind of spammy Discord channel anymore. I would say it's really not worth it. And then you spend the money engage with those traffic. What's the point, right? It doesn't make sense. So community building stage is very important. Yeah, and then the pre-launch stage, pre-launch and then product launch, right? It's very transitional kind of stage. So your product is already mature. So this round, you can do a financing round just to raise some capital for marketing, which is very common. This is usually called the A round, or they call it like a pre-launch round, or whatever, however you mean it, right? So this round is usually more expensive in valuation, of course, but then there's less risk because your product is mature. You have a solid community out there already, so you can justify that. For some product, right, the governance token is not necessary to be live from day one, but if you're a blockchain, the governance token has to be there. So case by case is different. The timing is something you can manage yourself, but investors also have very clear mentality, right? Do I bet on you? Let's say Aptos, they did a pre-launch round. I think the valuation is about like a 6 billion. Some VCs got even more expensive pricing. They have the expectation themselves. They want to have immediate sort of return, right? The moment the token is unlocked, they can cash out already. They don't want to wait for the product to grow. So there are certain VCs who cater for that kind of cases, which is totally fine. If you still want to do fundraise, look for that kind of relatively late stage, high valuation tolerance kind of VCs, yeah. And then there's also a TGE post-launch version. For example, Polygon, they wanted to develop a secure rollup, secure EVM. So back then they did the OTC round with a lot of like classical Web2 VCs, mega funds, and then institutions. And these people brought money to Polygon Treasury, and then they use that money to invest in Mir protocol, MIR, and also they did a merger with Hermes, HERMES, which is the core contributor of their CKEVM. I think they're live next month. So these cases are very common as well, right? Like for example, bad example, right? Like Terra, like Do Kwon also raised OTC round after the token is quite popular in the industry, right? Like people like Tiger Global, the Dragonfly, they all invest in it, right? It didn't end well, but then it's a common practice. Let's say if you really need big cash, right, you can do a OTC round at a discounted price and subject to lock period, for your project to grow faster. Yeah, so that's the fundraising timeline and roadmap. And then you guys can plan that. This is a very important page for your deck. Don't just like randomly put something there. I see a lot of decks because of this page I have to pass because they're just not so serious with how they plan further for your project. Yeah. So I'm gonna stop here, and then do you have any questions? Feel free to shoot.
Thanks, Nicole. This is awesome. I saw our audience actually did a thumbs up while you were doing the course. So it's really interesting. Yeah, and then Steve was like, it's really necessary for him as well. So guys, if you have any questions, you can click the button of reaction there and raise your hands that you can ask the questions. Yeah, Steve already want to hear more from you, Nicole, in the future. So thanks for sharing. I love how you bring this insight from both Web2 and Web3, but also from a VC and project perspective. So you are actually our very first VC mentor to speak. So I'm sure the team will find it really interesting. Yes, so Everest actually asked a question on how, as a VC, how do you value Web3 company? I think you mentioned about the valuation. I guess, is there anything else besides the number that you will be looking at when you evaluate a company?
Yeah, the guideline, right? Like I would say the ballpark. Of course, early stage, I usually just how much money you need to build that product and how much allocation you're giving out for this round, and then divide, and then there's a like a ballpark number. But of course, if your core member is very experienced, I will give you a premium for that because I want to really charm you and bid your project, right? And also, let's say if your product is so rare, has like a very strong like a barrier, simply there are not so many people who have the like let's say right genes to do this. Of course, I'll give you some multiple as well. So I would say there's like no specific formula. Like different VCs have different risk appetite and different kind of return profile. Our fund, because we're very early stage, we seek multiple. So we are quite I would say statistical with the valuation, right? We want to make sure we can bid on the best project, but also we want to have a fair valuation. So we will go for this way. Of course, there are a lot of VCs out there who just give you a random number. Yeah, that's it. Are they good? Not 100%, right? Like they might give you a capital, but they might not give you the best resources and guidance. It's really a trade-off. You need to think about it yourself. And I would say for us, right, we are, because we've seen so many projects, we just, myself, right, my partners are very experienced. They're like all like Web2 like veterans, and myself, I've seen so many projects in Web3. I have my certain logic as well. I saw all those high valuation projects doesn't really go long. So yeah, we have different methods.
That makes sense, especially going for the long run, right? So the methodology definitely makes sense. I think I know it's actually past 5 minutes. So Nicole, thank you so much for your time. This is such a great context, and we have the recording for everyone as well. So really appreciate everybody for joining. Again, Nicole, thank you so much for bringing our Web3 report mentors, and thanks for bringing so many great insights to us tonight. Thank you.
Thank you, Heidi. Yeah, thank you, everyone.
Yes, thank you.
Yeah.
Bye.
Okay, cheers. Bye-bye.
Bye.